Good evening, everyone. Hello, happy Sunday. How are we all doing today? Get my chart straightened out. All right, real quick, can I get an audio check before we get started? All right, awesome. Good to go. All right, everyone. So, how are we all doing today? New week. Looking forward to this trading week. CPI on Wednesday. Just go over a few things before we get into our technicals. Pretty range bound consolidation for most of the major assets. Looking at bonds, dollar, as well as S&P, Forex. So we're seeing pretty much consolidation in dollar and bonds, as I've noted, and that's going to reverberate throughout the marketplace. So because we're not having that directional movement in dollar and bonds, that's going to translate into our other assets, indexes, Forex, commodities. So because we're not seeing that directional clarity, we need to be mindful of that. As you guys know, for those of you guys that have been with us here for a little while, you guys see us calling targets and they usually come to fruition, but it depends on the market profile that we're in. And right now we need to be mindful that we're in a consolidation. So it's not in a hurry to run to any objectives until we see that displacement. So the reason we have such high accuracy and hit rates with the calls that we make here is because we factor in dollar, bonds, and we have that directional clarity from a risk on, risk off perspective that allows us to be deadly accurate on our Forex index pairs. But because we haven't had that same clarity and it's been consolidation, these have been lower probability trading conditions. Does that mean it's untradeable? Absolutely not. You can still get in here, scalp, take a daily range when it permits it, depending on the economic calendar and several other things you can use to determine market profile. But we just really haven't seen the higher time frame directional clarity from dollar and bonds to have that pinpoint precision that we typically have. So just being mindful of that moving forward. We do have CPI on Wednesday, as I highlighted, and I do think that will be the catalyst to break us out of this consolidation. So with that being said, let's go ahead and get into the charts. And then as you guys have any questions while I'm going over doing my intermarket analysis here live for you all, be sure to drop a question in the comment box and I'll be sure to get to those after I share the analysis. So let's get right into it. So looking at the dollar on a weekly chart, bearish order flow. I've been taking our attention down here to the sell side liquidity. As we've seen, though, we've been in a consolidation for the past 3 days, or 3 weeks, I mean, and we haven't seen much inclination of price to want to move higher or lower. Trading the order flow we have in front of us, it has been bearish, so I will expect that sell side to be taken in the form of relative equal lows. So what will be interesting to note is the seasonal tendency for dollar is actually bullish going into the month of May into June. So typically those seasonal tendencies are strong and they do materialize. So what I will look for is potentially just forecasting a quarterly shift. I would want to see how we trade below these lows. Do we trade below the lows and accelerate aggressively through them and seek a deeper discount? Or do we see price sweep the lows and then reject them, setting up bullish order flow? So these are some things I'll want to monitor going into this week and maybe into the next one. But I am favoring lower prices, even though the seasonal tendency is bullish. We still need to trade the market we have in front of us and then adjust accordingly. So relative equal lows, sell side on the weekly. Order flow's been bearish, so I'm going to expect that to continue. Seeing here, we were unable to even trade up to the consequent encroachment of this wick on this weekly candle from the 10th of April. So order flow is still bearish in my opinion, and now we've allowed plenty of sell side liquidity to build in below these lows. So if we are going higher, price should take out these lows and then reject it, and this should make it obvious that we are going to see a change in the state of delivery. If we see acceleration through the lows, we'll trade in line with what the market's showing us. But as I've said right now, our focus is lower prices. So dropping down into a daily chart, looking at the sell side here, assuming we get acceleration through the sell side, here marked out with these relative equal lows, I would be looking for these lows here to be taken out and this inefficiency here. As I said, that's all contingent upon how we trade below this sell side. So looking at last week's trading, we did have a bearish week in terms of the delivery. High Monday, we saw a manipulation, Judah swing. For those of you guys that were watching the Power of Three teaching from last week, if we're bearish, we'll expect the opening price. Here we opened on Monday, manipulated higher, where to above the relative equal highs that we were looking at, that I forecasted to you all would likely be taken if we were going to go lower. And then we hit that and traded lower. What other specific level was I looking at that I shared with you all? Well, let's look at the mean threshold of this bearish order block that I highlighted would be the last line in the sand for bearishness on dollar, as we wouldn't want to see this level violated if we are going to go lower into the coming week. So 102.398 level. So what do you know? That was our high of week. So looking at this dealing range, we're trading in from high to low. Price trades up into a premium. More specifically, what level did I give to you all? Mean threshold of the bearish order block. Hit that beautifully, and then we rejected that lower. Where did we make our high of week? Tuesday, which we would anticipate in a bearish week. So not much range to work with, as we've been range bound within this dealing range, but I am favoring lower prices given that we are still respecting premium arrays and seeking discount. So with that said, let's drop into our hourly chart. So why is price still bearish to me on a hourly chart? Let's go ahead and make this full screen, and let's measure out our dealing range from high to low. So we're within this parent dealing range, the most extreme high and most extreme low, where the energetic run initiates from on the downside and the upside. So we've predominantly been range bound within this dealing range on an hourly chart. Let me extend this equilibrium through. As we can see, I highlighted to you guys, I wasn't sure if this was last week or the week before, but if the market is showing no willingness to run away from equilibrium, that's indication that we're in a consolidation profile, and we have been seeing that. So we see equilibrium, price is just trading around that, respecting that level. On the upside, comes down to the discount. As soon as we're in discount, runs up into a premium. So that's a range-bound market condition where it's not in a hurry to accelerate away from that. But given that we are bearish, looking from premium to discount of our dealing range, all the high probability short setups are forming above this blue line, which is our equilibrium. We see we trade above it, displace lower, short setup to tack discount. We trade back up. And then when we were trading on Friday, where we closed, I gave to you all these relative equal highs here in the form of buy side liquidity. And I said if we are going to go lower, I would favor these being taken out. Why? Just for the simple market pairing, market efficiency paradigm. Above these highs, what rests above there, buy stops, traders that are short, they're going to put their protective stops above here. So if we are going lower to this line, which is that sell side liquidity, I would expect the market to dig up into what? Premium above that equilibrium. More specifically, what level in that premium? The buy side liquidity, buy stops. So buy stops were engaged here. What's this black line? That's our mean threshold of the bearish order block. Hits that level beautifully and immediately gives us a reaction lower. We take out this low, shift the market structure here, intermediate term low taken out, and then we see bearish order flow into discount levels, up close candle, respected, fair value gap, trade up into, rejected, fair value gap in here, weren't even able to trade into it, rejected, fair value gap, rejected. So we're seeing bearish order flow on the dollar index. So I will expect this to continue going into this week. So given that we're in this consolidation, this is pretty low probability by my definition, as we can't really confirm a bullish or bearish bias in a one-sided way. So I will not be personally looking to do a whole lot on the Forex side, looking at Euro, British Pound, because we've been consolidating on the dollar. But one thing that I'll give to our Forex traders here, and this is textbook ICT. So if the majors are consolidating, which is what we're seeing in dollar, If we go over to euro, consolidation in euro, and consolidation in British pound for the most part. So if you're a Forex trader, what would you do? What would I be doing if I was a Forex trader? Well, let's look at these two pairs and then we would go into our crosses. And I'll cover that a little more when we get to that. So looking at the British pound, and let's compare that to the euro. Which one is the stronger pair? Is pound stronger or euro? Clearly, the pound is showing more strength on the upside. So as I said, when the dollar is being held in consolidation, this allows the central banks to move the cross pairs and allows them to move much more freely. So if you're a Forex trader, the majors are consolidating, take your attention to the crosses. So because we're seeing this consolidation, but which one is stronger? Obviously British pound. So we're going to go to the euro pound. Before we even pull up that chart, what would we expect the price to look like in that chart? Lower, because it's euro first, pound second. So because the pound is stronger, that would make euro pound weaker. So there we've already determined our bias for euro pound. EUR, GBP. Forex.com feed. So we've already determined the bias by looking at euro and pound separately. And as we would expect, before even looking at the chart, it is moving. It's a market that is trending. And why is that? Whenever the dollar is held, I'll cover it again, dollar held in consolidation allows the central banks to manipulate and move the crosses much more. So we're seeing the crosses move. So nice delivery here. As I said, the bias is bearish because euro is weaker than pound. So because pound is second, we're going to expect this pair to be bearish. So we see a nice delivery here, relative equal highs. Trade above it. Do we accelerate above it with speed or show willingness to want to continue through it? Not really. We just wick and sweep it. And then what do? We displace lower through a swing low. So that would be our market structure shift or 2022 model. 2022 model, because swing low after buy side's taken out, we displace through it with what? A fair value gap. So fair value gap in here, we trade up. Where do the bodies stop? In the fair value gap. As we know, the bodies tell the true story. The wicks are where the damage is done. So they can color outside the lines and the narrative or framework we're looking to work within still be valid. So we see here, bodies respecting that beautifully after displacing lower, failing to displace higher. So that's how to read order flow. We're rejecting the highs and trading through the lows with speed. Trade up into the fair value gap. That's a short. But where would we look? Let's look at these relative equal lows here. Mark that sell side. So looking at the order pairing, relative equal highs, what resides above there? Traders buy stops or traders looking to buy the breakout. The breakout artists are tripped in as well. Smart money selling short to them because the bias I gave you guys, euro is weaker than the pound. So because of the euro pound second, we'd anticipate this to be weaker. So there's our bias. And then we just look for the technicals to get in line with what the fundamentals are sharing and a nice delivery. So before going into the bonds, I just wanted to share that for our Forex traders. What would I be doing if I was a Forex trader and the dollar and the majors are in consolidation? I would be trading like that. All right, going into bonds real quick. So not much clarity. So as I've been saying, why are we seeing these sloppy range-bound conditions? Because we are seeing that the bond market and the dollar is not moving. So for us to have high probability directional clarity on the higher time frames in our Forex pairs and our indexes, we need to see the dollar index moving and bonds moving as well. And then when those are all moving in concert or in sympathy, or in a symmetrical market in terms of risk on, risk off, this is where we get our very clean directional price runs. And we're just not simply seeing that as the bond market. Does this market look like it's in a hurry to go anywhere? Absolutely not. It's pretty much in a range bound consolidation. And then also looking at the dollar, it's also in a similar consolidation here as well. So because of that, that's going to create lower probability conditions for higher time frame traders. So as I said, it's still tradable, but you need to adapt to the environment we're in. So that would require you to be an intraday scalper or capturing the daily range if it provides it, depending on the session. So with bonds right here, this looks low probability to me, but I'm still going to give you guys what I'm thinking. So gun to my head type scenario here for the bond market. I will be looking at higher prices, as this would bode well for lower dollar as well into that sell side. So I am seeing how we have been rejecting sell side. So let's mark out this volume imbalance. Extend this through. So none of the bodies are really able to close this or accelerate below it. We see here we swept sell side, rejected. We swept sell side once more, taking out these relative equal lows, and then we've rejected it again. So this is a low probability environment, but because we are closing above the fair value gaps in here and rejecting the sell side, I will favor higher bond prices, which would put pressure on dollar, giving us risk on higher forex, higher index markets. So nothing really notable here other than the consolidation. So how do you guys, hey Dylan, how do you identify low probability environments? How do you identify when you don't really want to be trading much or pushing? This is what I've just given you guys here, how to read bonds and dollar index. Because when you guys see the markets are moving, they're trending, they're in a hurry to get somewhere, we're all over it like white on rice. Because we have that forecasting ability by doing intermarket analysis the correct way. But right now, we just don't have that typical clarity that we have. As I've said, it's still tradable. You just need to adapt to the environment that you're in. So with that being said, let's go into indexes. And I'll take a look at gold. Gold hit some higher time frame objectives we were looking for. Quite a few gold traders that were asking me about gold, so I'll go ahead and take a look at that. So let's go up to the weekly on the S&P. So all we've really done was trade lower into this fair value gap. I do like how the fair value gap here is supporting price. We haven't really been able to close below it or accelerate below this level. All I'm seeing we did is take out previous week's low. What did that allow us to do? Accumulate sell side liquidity. So I'm forecasting that the S&P is likely to dig into this volume imbalance in here. Let's make that green. And this buy side liquidity. So that's still my upside objective. Assuming dollar accelerates lower and we get that lift higher on bonds to facilitate that. This is what I'll be looking for on S&P. Weekly candles, we've wicked lower, but we have found support inside of this fair value gap, unable to really close below it. And then as I've highlighted here, we took out previous week's low, and then we accelerated higher after doing that. So I anticipate continuation into this week. So just some things to keep in mind, it is CPI, so we'll have to be mindful of that highly manipulated news driver on Wednesday. I personally won't be looking to be too active on Tuesday, given that it's the day ahead of a high impact news driver like CPI, so we will typically see more range bound consolidation conditions. And I'm not in any hurry to go into low probability conditions and gamble. Will there probably be moves? Maybe even a nice one? Yeah, but I'm not too interested in that because I know I can come in and find my bread and butter setups after that, and there'll be plenty of days for me to handle my business in that regard. So on the weekly, nothing much here really notable other than finding support inside this daily fair value gap, not showing a willingness to want to accelerate lower. So I will expect this following week to accelerate higher. Some key levels I'll be watching is, of course, this weekly fair value gap. Do we trade back down into it? I wouldn't favor it because we've already hit it twice, but I will be looking at the 50% of this wick, and I would be seeing how we trade there if we do trade lower into these higher time frame objectives, being the buy side and the weekly volume imbalance. Dropping into our daily chart now. Take this off. So looking at our daily chart on the S&P, really we've been seeing seek and destroy on a daily time frame. Why is that? Short-term high, taken out, short-term low, taken out, short-term high here, taken out here, and then short-term low immediately coming for that. So consolidation, seek and destroy type profile. Why would we expect consolidation in S&P? is I've highlighted if the dollar index and bond market isn't giving us that risk on, risk off directional clarity, then this will typically make for sloppy conditions in S&P as well as Forex as well. So we just need to adapt and intraday trade. So for example, let's say you're a swing trader or a position trader and you've been trying to get positioned inside of these conditions. I would assume it's been extremely difficult for you. So how can you know when you really want to push your edge and trade a lot as a swing trader? You want to wait till we have that directional clarity in our dollar market, bond market, as that'll give us clean directional price runs in the S&P. So for the swing traders, throw that in there for you guys. So what did we really do last week? On Monday, we traded higher into one of the objectives we were looking for, which was this swing high and this swing high here. We had those relative equal highs. I gave that as an upside objective. But what made me reluctant to expect continuation was how we traded through it. Is this a market that showed a willingness to want to displace higher and continue reaching for premium? No, we traded above that level and then we immediately came back down into the range, indicating that we weren't still leaving this range. And then once we traded lower here, we traded down into our discount levels, traded down into the opening of this daily order block, repriced the entire balanced price range, and then we traded lower through it. And then what was the drawn liquidity? Short-term low here. How low could it go? Extend this daily fair value gap through, trade to the bottom of that beautifully, and then we trade higher. This is the non-farm payroll trading day. So huge range day to the upside, trading back above the BPR here. And let me go ahead and extend that through. Make that blue. So trading back up through this blue box here being our BPR and volume imbalance. So now we're trading above. What are we not respecting? We're trading through premium arrays and finding support in discount arrays. So we rejected the sell side, as I've highlighted up here. Did this low taken out here indicate that it wanted to accelerate through it and continue aggressively on the downside? Absolutely not. We just traded through this low and immediately traded back into the range, indicating what? We're still range bound. So I will want to see some directional movement here in dollar, lower or higher, whichever one. As traders, we don't really care. We just want to see the markets move and trade with higher time frame directional clarity. So as I said, this has made trading conditions in S&P and Forex a little more difficult, as you have to be a nimble intraday scalper using an hourly and 15-minute is your higher time frame, as we've been in pretty much consolidation on a daily chart. So as far as my price expectations for this week, assuming we get lower dollar, I will want to see us trade to and through this fair value gap in here, trade through these relative equal highs and reach into our higher time frame objectives, being the buy side liquidity above this high and this green box in here, which is our higher time frame weekly volume imbalance. One thing I do want to mention to you all is the seasonal tendency for the spring months, April, May, going into June, is bearish. So because of that, if we are going to go lower, I would like to see the market take out some form of buy side. So if our attention is down here to these relative equal lows, what's it going to want to do first? I'm likely forecasting that we're going to go higher, take out these highs, show a quarterly shift. So I'm predicting a quarterly shift, trading up into this buy side. We would want to see confirmation that we trade higher, reject, basically 2022 model on like an hourly time frame, where we see trade higher above buy side, displacement lower, and then set up our bearish order flow into these lows. Of course, that would have to be met with a dollar index also rejecting the sell side liquidity and trading higher to put us back into a risk off symmetrical market. So that's what I'll be looking for going into the coming week. One thing that is notable also for bullishness is the fact that the NASDAQ did not take out this low here. So we saw a SMT at the lows, and this is what gave me long confirmation into the NFP release. So for trading NFP, I don't trade ahead of the release. I trade after 9:30 equities open. Typically the manual intervention will come to an end, and then the algorithm will be back in control of price delivery so that we can get in there and take our setups. So that's how I trade NFP. But as I highlighted here, the NASDAQ did not take out this lower low. So we see a SMT between S&P and NASDAQ. Here, S&P took out the low. So I'm forecasting a market maker buy model here. Original consolidation, trade lower into a key institutional level, which if you guys remember, this daily blue box is a daily fair value gap and sell side liquidity. So as I highlighted here, is this a market that's showing a willingness to want to accelerate through this low and continue digging deeper into discount? Nope, we just traded below it, immediately back into the range, and now we're displacing higher. So what I would want to see coming into this week is potential delivery up here above, completing our market maker buy model, confirmed by the smart money reversal down here, which was confirmed by the SMT we saw with S&P and NASDAQ, finding support inside of this daily fair value gap, and then now showing bullish order flow on the upside. So that's what I'll be looking for in S&P this week. So with that being said, that concludes the inter-market analysis. And I will now take questions or look at other markets you guys want me to take a look at. Hey, Denisha, no worries. No worries. Thanks for joining us. Glad you're able to make it, and that's why we upload the recordings. EU analysis? Absolutely, David, for sure. Alistair, let me go and take a look at your question real quick. Please explain why on ES you called that a BPR. Only see one fair value gap, not two. This one right here. Yes, this is a BPR because we have a SIBI and then a BISI on the upside. So two fair value gaps overlap. We want to take the range where the specific inefficiencies overlap. So let's zoom into this here. We're going to use this range in here because this is the low end of the inefficiency and the high end of it here. So we're going to look at the inefficient price delivery, where that overlaps, and that would be our BPR. So that's why I considered this a BPR. And then future handles. Yeah, while I'm on this, I'll go ahead and cover that. So is there a difference between BPR and inversion fair value gap? So yes, a BPR, as I said, two fair value gaps that overlap. Inversion fair value gap is just simply a fair value gap. All PD arrays have an inversion aspect to them when the state of delivery changes. So for example, an inversion fair value gap would typically be a former fair value gap that we would expect to act as resistance, but then it would turn support with the narrative and state of delivery. So let me see. Let's drop it to a 15. Let me see if I get an example. Yeah, you know what? Let me just go ahead and this was actually one I traded, so I remember this clearly on a 1 minute. And David, Wade, Earl, if you guys are listening to this, I actually meant to cover this scalp I did on the PM session, so I'll go ahead and cover that now and just give it to everybody while also incorporating the inversion fair value gap concept. So where did I look to trade that? Okay, right in here. Was it in here? Oh, no, right here. Okay, this is where I went, 1424. Okay, perfect. So bullish bias was bullish. I already covered that with the market maker buy model. We saw that SMT at the lows. We start seeing bullish order flow. So I'm already expecting higher prices. What was the draw on liquidity? Let me go ahead and share that on a 15-minute. It was the FOMC highs right here. I was looking for that buy side to be taken. It did not reach it, but it doesn't need to for the trade to be profitable. So how did I use an inversion fair value gap? For this, I actually used it as an entry. So this fair value gap here, when the state of delivery is bearish, we trade into it and reject. But then here we see we're bullish on a higher time frame. So I'm looking for higher prices. So how did I get my entry for this setup? I want to extend this fair value gap through here. So as I've said, inversion fair value gap is simply a former fair value gap that can act as dynamic support and resistance, but it depends on the state of delivery, whether the market's in a buy or sell program. So I'm expecting higher prices. So what does that mean I'm expecting? Bullish order flow, buy program. So now, whereas this would act as resistance when we're in a sell program, if I'm expecting buy program or bullish delivery, what would I expect this fair value gap to do? Be an inversion level. So I'm using this as a long entry. As soon as we trade above it and close, as soon as we trade down into it here, I'm hitting a long. Why? Because I'm expecting us to go higher. So I'm already forecasting this is going to be an inversion fair value gap. I'm not able just to, or not, I'm not able to, I'm not dependent on just marking it up in hindsight. I'm forecasting these things having an inversion aspect to them as I'm watching the state of delivery. So that's the difference between a inversion fair value gap, and I actually use this as a basis for a long entry into the higher prices for Friday. Future, did that cover your question, my man? So for this specific level, I would put a stop below here. The reason being fair value gap, volume imbalance, and order block. That would be below 3 PD arrays, so I'm comfortable placing a stop there. So looking at the risk to reward on this trade by putting a stop below the swing low, I'm reluctant to do this because, man, you see some interesting characters on the internet with their 300R, 50R setups, which is just ridiculousness. And it really gives it a bad rep because then new traders try to go in there and do this, and they have a really difficult time. But just looking at it here, if you would have taken profit at a nice 1 to 4, you still get nice risk to reward trading or putting the stop below the swing low. But I'm looking to put it there for stop placement because the inversion fair value gap, the volume imbalance, as well as the order block puts my stop below 3 PD arrays. So personally, for my model, I'm comfortable placing a stop loss there. I recommend you guys trade a model that's comfortable for you. I'm just sharing what I do and how I trade with these concepts. Awesome, Future. Glad I was able to cover it. Alawale, perfect. Thank you. Glad to help, my man. Earl, appreciate you. All right, let me take a look at Euro, and then Denisha, I will get to the Canadian dollar and oil. Absolutely. All right, so let's go up to a weekly for Euro. So I gave you guys my higher time frame draw. I think if we go higher, we would want to go into this volume imbalance here, this inefficiency. We are seeing bullish order flow. So this is where I'm expecting price to go into. Looking at dollar index, assuming the bearish order flow continues, so barring any crazy displacement higher on dollar, I'm still expecting it to go lower. And that's going to depend on when the market makers want to bring it out of consolidation. I'm expecting that to come with CPI. As we know, the news drivers are just a smokescreen for price to do whatever it's going to do anyway. So I will expect for us to leave this range bound condition we're in on the CPI. One thing to keep in mind is the larger the consolidation, the larger the expansion in ranges will be after the consolidation is finished. So I will be interested to see where we go after we expand. We're not trying to guess the expansion. So, and this is pertinent to Euro, that's why I'm covering it. So for example, let's look at this. So here we see we're in this consolidation. Retail traders are in there trying to guess which way are we going to break out. Are we going to break out to the upside or to the downside? We don't care. We're waiting for the expansion because for those of you guys that know core content, it goes expansion or consolidation first, then expansion. Then once we get expansion, it can either go into retracement or reversal. And then that's where we look to get our trades after the expansion happens. So we're not trying to forecast the expansion. I'm tipping my hand to you guys as to what I'm seeing, which is lower prices. So I'm forecasting the expansion being lower. But once we see that expansion, we then have two options out of that, retracement or reversal. So that's what I'll be looking to measure and monitor moving forward. But with that said, because I am bearish dollar, I will be bullish Euro. So we are seeing bullish order flow. Discount levels are still supporting price, even though it's not real beautiful delivery. We also have a bullish order block in here, down close candles, ahead of the displacement with the fair value gap and market structure shift. We are still finding support inside this fair value gap. We now have relative equal highs, and this volume imbalance on a weekly that I highlighted would likely be a draw. And then we also have the buy side. So my 3 targets for the euro this week will be previous week's high at the let's call it 1.11. And then after that, the volume imbalance at the 1.15, and then after that, we have the buy side liquidity at the 1.118 level. So those will be my upside objectives on the euro, assuming the dollar index trades lower. I would want to see this fair value gap support price. I wouldn't want to see us come below this if we are bullish. And the same thing goes for dollar. That mean threshold of that daily order block would be where I want to see a reaction lower to give us our risk on bias. Okay, so let me go back. I had quite a few questions on that ES example I was looking at, so let me go ahead and take a look at that. So Alistair, you're asking, this was a great question, please. At what point do you stop tracking an inversion PD array, or any PD array? Once we trade away from it, as long as we're still trading at these key levels that forms a PD array, whether that's an order block, breaker, whatever it may be, I'm still going to track that continuously moving forward as long as we're trading around those levels. Because one of the key things about what we do here is we extend and we look through candles. I know other schools of thought and trading philosophies don't focus on cutting through candles, but we do like to use that as the algorithm will refer to those levels. So once we trade away from it, it's no longer significant in my analysis. Okay, Dylan, on that trade you took, Denisha, did the inversion replace your need to see the displacement through that high, or just another type of model entry for you? So yeah, so that is another entry model I have. Let's look at this on the higher time frames. So I went right into the 1 minute, which I don't do, and I don't teach to trade like that. We drop all the way down from our daily, hourly, 15.5 down to our 1 minute, and that's what makes the 1 minute high probability. So I'll go ahead and just give you guys the full recap in terms of what I was seeing for that. So as I said, smart money reversal here confirmed by the S&P with the NASDAQ. We do see that price trades through discount premium array here, fair value gap, order block, several key levels, new day opening gap here extended through. So we're trading through premium arrays. So what does that indicate? That the state of delivery is bullish. So we do start seeing the market find support in discount levels. We see here, new day opening gap, extend that through. We also have a breaker here. Let me make this purple. This is a breaker because it's low, lower, low, trade through it. Highest up close candle, extend that through. So we find support inside the breaker, new day opening gap in the NFP news release, and then we displace higher. So after we displace, lunch hour consolidation, what do we expect? A retrace on the stops. So 15-minute swing low. What's below there? Everyone that chased the move higher or is still long and don't know how to place a stop properly, they will get taken out. Who's accumulating that buy side? Smart money. Where's the draw? Here. So now with the 15-minute showing bullish order flow, breakaway fair value gaps, unable to trade down into it, bullish signature, that order flow is extremely bullish. Where do we stop and trade down to? The low of the lunch hour consolidation, bullish order block, opening price, beautiful delivery, hit that opening price and displace higher. So I'm already having all these confirmations that the market is bullish. So now I'm just looking to get on at any PD array that allows it. So looking on the 5 minute, my ideal entry would have been in here. After taking out the sell stops, you could have bought the fair value gap here or the order block. I didn't. Sell stops taken, we displace higher and we reject that sell side. So just like we did here in London, ICT was actually teaching on that in his most recent Twitter space, which was great, by the way. I would recommend you checking that out. So London, kill zone. Let me go ahead and mark that out here. Let me make that. Let's go and make that orange. Okay, so this is our London open kill zone. So opening price here at midnight. Not going to mark all this out, but just keep in mind, here's our midnight opening price. So what do we expect if we're bullish? Price trades below it, takes out sell stops. So as ICT covered in the Twitter space, the turtle soup will typically form in the London setup. Why is that? Because we're going to look for a false break in the London open. What's that going to do? Get reactionary traders off sides. Who's buying the sell stops below these equal lows? Smart money. And then we displace higher. So now we have confirmation behind us that London is bullish. And then you see how we take out these lows versus how we take out this high. So lack of displacement, no inefficiencies on the downside delivery versus displacement on the upside. Trade down, fair value gap, measuring that here. Bodies respect that beautifully. So bullish order flow, displacement higher. And then we see on the NFP, so what do we expect for London session? Just covering the full daily range, measuring from the high to low, which would be right here. Let me take these off. That's the bullish breaker, which we can still see here on a 5-minute. Low, lower low, highest up close candle, extend that through, bullish breaker. And then the blue boxes are new day opening gap. So we would want to see price supported in here if we are bullish. But now looking at New York session characteristics, if the London session will typically begin the move, we would want to see the New York session offer a continuation. That continuation would come in the form of the market offering a discount. Why is that? Smart money's bullish. They're not going to buy in a premium. Market's going to come down to discount, take out these sell stops. And then if we look at the optimal trade entry, here we also dip down into our optimal trade entry. So New York session is perfect for the optimal trade entry traders, as it will typically provide that in the New York session. And then we see here, if we're bullish, what do we want to see the market do? We want to see the market accelerate away from equilibrium with speed. So do we stay very long in a discount market? No, we immediately displace and leave it, which is what we want to see if we're bullish. So for your notebook, bullish market, we do not want to see price spend a lot of time in equilibrium or below equilibrium in a discount. So we want to see market offer a discount for smart money accumulation inside that new day opening gap and breaker, and then we immediately leave it, indicating price is bullish. So we have these bullish underpinnings on the, one second, how did that come up? So bullish underpinnings here on the 15-minute, 5-minute, lunch consolidation, retracement below the stops. So as I was saying, the ideal entry would have been in here for me, but because we didn't trade into that fair value gap, I missed it. So I needed to get in motion or get in sync with the movement that was already in motion. So now dropping down into our 1 minute, I ended up getting my entry in here. So looking at this on a 5-minute basis, the reason I was comfortable looking for a long setup in here is because we traded down into down close candle, volume imbalance, and fair value gap. So I would expect this to hold because that would be 3 PD arrays. So if this would be violated on the downside, that would be problematic for bulls or people expecting higher prices. So I wanted to see price go bullish in here. So now let's put this price range in purple. And now let's look at that same price range on the 1 minute where I got my entry. So we retraced down. What level did we retrace down into? Bullish order block. So bullish order block, consecutive down close candles where we displace from. Price trades back down into that bullish order block level. We hit the opening price once, twice, 3 times. What does that allow for? Smart money accumulation of longs. Where? Inside the order block. It goes consolidation, expansion, then either retracement or reversal. In this case, we're bullish, so we're going to expect a reversal down into our order block, and then we see price immediately get feedback that we're bullish. So that's why I was confident going long in here, Denisha, because of all this context that I provided. So I'm already expecting us to deliver higher. So now I just want to see the market give me confirmation that, okay, we're seeing feedback inside this order block that we're bullish. So as soon as we trade through this fair value gap, that indicates to me we're in a buy program because we close above it. So I'm forecasting the inversion aspect of this fair value gap. I don't need to see it after the fact. And then as soon as I get an entry in here, immediately blasts off into the higher time frame objectives we were looking for. Awesome, Denisha. Happy I was able to clarify that for you. Awesome, AB. Glad that was helpful. Pretty clear thought process. We will see how it plays out. We will see. We will see, my man. Surgical. Absolutely, David. Glad that was helpful, my man. Ezekiel, appreciate you. Thanks for joining us. All right, let me hop in the Telegram real quick, see if we got any more questions. All right, so I'm going to go ahead and cover USD CAD and crude oil markets there for Denisha. So let's get right into that. Let's start with crude. So real nice delivery on crude. It's been moving beautifully. Let's take a look at this top down. Go ahead and go through a top down analysis with you guys. Okay, so we are trading down inside of this monthly order block. I'm gonna extend that through the wicks. Why the wicks? Because it's an order block with a long wick. So we're gonna expect these sensitive levels to be the high and the opening price. Extend that through. Nice reaction in here. So the fact that we traded down took out 2 previous months low, and then we've rejected that higher on the upside. So I will be interested in seeing upside continuation on oil, given that we've taken out stops again, but not just that we took them out, how we reacted after we took out these stops. So look in here, take this off. So look in here, this previous week, we traded lower. After we took out these relative clean highs in here, we rejected that to the downside and took out sell side below the 20th of March lows. And then we've rejected that higher into the upside. So let me go ahead and take this off. And then looking at the adjusted contract, we also have a fair value gap, extend that through. Bodies are respecting that nicely. So further bullish confirmation on a weekly. So now let's go into the daily chart. And then here you will see the strong rejection of that sell side. So this to me here indicated institutional buying. Why is that? Because people with large, deep pockets, central bank traders, when they buy the market, it will displace and the algorithm will continuously deliver higher, 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 so that they can start distributing their long positions that were accumulated below the lows. So important thing to keep in mind, it's not their buying that's moving it higher. It's the fact that they bought that the algorithm will look to spool higher to allow them to distribute those positions. So real quick, back on the daily, traded lower. We now have a rejection block here. Took out the sell side, immediately rejected that with the wick. So I would not want to see this level violated. This low should be a key low. Why is that? Because it's a low that took out sell side. So I would not want to see this low taken out if we are going bullish. And we now have relative equal highs here. So extend this through. Buy side liquidity above the highs after the strong rejection of sell side inside of a monthly order block and a weekly fair value gap. So now dropping down into our, let's go into a 4-hour. So rejection block in here, as I've outlined, traded down into that rejection block. Nice reaction, displacement higher on the upside, shift in market structure here. So what I will want to see in crude oil, if we are going to go bullish, is once we trade lower, we have a bullish order block in here. Extend that through. I would be wanting to see reaction in here or in these fair value gaps. So this is more of a higher time frame analysis. So I would want to see a reaction here on a 4-hour chart. And then once we trade down into these discount levels, as I've said, whenever we see the market, we see consolidation, expansion. We're not going to chase the expansion because we're going to forecast a retracement or reversal. I'm favoring a reversal in this example. So measuring from high to low. I would want to see a swing high form though. A swing high would need to form to then give us that retracement lower. And then let's look at this thing on an hourly. It'll be a bit more clear. So once we see a swing high form and then we seek these discount levels in here, I will want to see bullish confirmation on a 15-minute or 5-minute to give us that confirmation that we are going higher. So that's what I will be looking at in crude oil moving forward. And then USD CAD. Crude oil is when I look to swing trade or long-term trade. It moves really nice longer term with directional clarity. So it's one I definitely like to focus on. So looking at USD CAD, let's start at the weekly. So price has delivered higher up to a premium bearish order block in here. Extend that through. Trade up into that bearish order block, rejected it. And then now we've traded up into this bearish order block in here. Let's get the mean threshold. So about here would be our mean threshold. Traded up into that, no bodies were able to close below it, sensitivity around that level, and then we've displaced lower. So bearish order flow on a weekly, and then after the displacement, fair value gap, trade up into that fair value gap, rejection lower. So looking at USD CAD, I will be favoring these relative equal lows here to be taken out and likely next on the list. Looking at this thing on a daily chart. Yep. Clearly see these relative equal lows in here. Sell side. Trade it up into the fair value gap in here, extend that through. Bodies held beautifully inside this fair value gap, indicating what? Order flow is bearish. And we are trading through discount levels, showing no respect for this fair value gap here, this fair value gap, or this one. So I will expect the market to seek sell side in the form of these relative equal lows. So these are my targets for USD CAD. Assuming we accelerate through these sell side liquidity pools with speed, I will be interested in this inefficiency down here to likely be a next downside objective, assuming we accelerate through that with speed. So that's what I'm seeing there for crude oil and USD CAD. Hope that helps, Anisha. Hey Ghost, glad you got your electricity back. Yep, man, that's why we upload the recordings, so no worries. Awesome, glad that was helpful, Denisha. Thank you for joining us as always. All right, so we'll finish up. Go ahead and take a look at gold. I have quite a few gold traders that have been asking me about gold, and we have delivered to the upside objectives that I've shared with you all. So let's look at this thing on the regular. So here we have our relative equal highs, easy drawn liquidity, order flows bullish, fair value gap, trade into it, displace higher, down close candle, bullish order block. Remember what I shared about order blocks, where would be the sensitive price level, the high to the opening price, trade into that, displace higher aggressively. So we're seeing clear bullish order flow. Where would we expect the market to deliver to? Relative equal highs. First target was this high here, delivered that beautifully. And now we have this high here. So because now we have relative equal highs still, I will be interested to see how we use this liquidity going into CPI. So after CPI, we'll have much more directional clarity, as I do think it'll be what allows us to break out of this range-bound consolidation we're in most assets. So I would be interested, just forecasting a little bit ahead to you guys, what I'm seeing in gold. Potential trade above the highs, and I would be interested to see us reject. So make some form of a turtle soup setup in here displace lower, reject it. And then I would be interested to see if we do come lower after the relative equal lows here at the 1600s and lower. So as I said, I'm not going to give that to you guys as an analysis yet, as a forecast, but that's just what I'm seeing and what I'll be looking for going into CPI. So all higher time frames or upside objectives reached on gold, beautiful delivery on the upside on the higher time frames. So that delivered beautifully. So with that being said, that's what I'll be looking for. Any other questions on any other assets? AB, do you tend to try to buy the wick like NFP Friday or wait for another pattern to form? So buying the wick meaning the manipulation move aggressively in one direction. Do I try to get long in that? That's what I think you're asking. No, I do not look to do that because it can be aggressive and continue moving down. So I'll typically wait about an hour before or an hour after the news release comes out. That's typically when the manual intervention will be done. And then we can clearly go in there and see setups with the terrain that we have to navigate. I don't need to get in on the lowest low or the highest high to have a really profitable day. So I personally do not look to trade like that. I will wait for the damage to be done, for most of retail to get cleaned out. And then after that is when we go in there and look to operate. So that's personally how I trade these high impact news drivers. I don't try to go in there ahead of them or guess while it's spooling aggressively. I'll let the damage be done, and then I'll go in there and find the setups if it's clear to me. Similar to how I did on S&P. So I'll go ahead and show you guys what that looks like. Looking at this thing on the 1 minute, really clear delivery here after the NFP release. So here's the NFP manipulation higher and lower at 8:30. And then we see displacement higher. The market becomes very clear. Fair value gap. You could buy that. Fair value gap here. Another long. Another fair value gap here. Another long. Lunch hour consolidation, as I've highlighted to you all. Takes out sell stops. Fair value gap. Doesn't trade into it. But it did trade to the breaker. Why is this the breaker? Low, lower low. Highest up close candle. Extend that through. Trade into that. Find support. These are all valid long entries. So plenty of setup still to be traded after the news release. So I don't need to get in there on the initial news release as it usually does not end well for most traders. So with that being said, everyone, thank you all for joining us. I really appreciate it and for your great questions. And with that being said, I will be active in the chat this week, share with you guys what I'm seeing. Keep in mind, CPI on Wednesday. So be safe and don't look to do anything foolish. Appreciate it, Denisha. Thank you all for giving the stream a like. It helps us greatly here. And with that being said, any feedback is appreciated. And see you guys next week. Have a great one. Good luck and good trading.